Good afternoon and welcome to NYFP. In today's trading session, the major U.S. stock averages are in the red, but we will take a step back and take a look at the Eurozone. Yesterday, we got preliminary second quarter GDP figures that were better than expected. Joining me now is Sandra Navidi of BeyondGlobal. Sandra, good afternoon and thank you so much for joining me.
Thank you. It's a pleasure, Rami.
Well, the recent economic data out from the Eurozone have been better than expected. We got the second quarter GDP out yesterday, and that also showed a modest recovery. But we can't forget about some of the nations that are still hurting. But do you think the glass is half full or half empty?
Considering where we're coming from and what the alternatives are, the glass is definitely half full. There's still a lot to be done, but I think this could be a trend reversal, even though growth will probably not continue as is because it benefited from some one-offs. But I think sentiment is very important, especially in the Eurozone where doom and gloom has been weighing on the economic activity.
And Sandra, when you look at the headline number for the GDP, it does appear as though we are seeing that recovery, but we can't forget about some of the threats to Eurozone growth, including the debt crisis and political instability, and we also have massive unemployment in some of the countries. So where are the biggest threats right now?
Well, I think we've seen great structural reforms in some of the periphery countries, but the price for that was great austerity. So people have been suffering. So one problem could be that people revolt at some point, and especially now that things are in the green zone, people say we have to lower our austerity measures. And then also the masses of unemployed, of course, that's a lot of social dynamite, and it's very dangerous, and you need a much higher growth in order to pay off your debts and absorb all those unemployed.
And Sandra, it does seem as though it was just yesterday when we were talking about whether or not the Eurozone nations will stick together, and right now it does appear as though those conversations have quieted. Now, when we look at the GDP figures, we're seeing strength in Germany, of course, as well as France, but do you think that'll continue?
I think there were a lot of unique factors this time. The previous quarter was very slow because of a strong cold winter, so the following quarter was more of a catch-up, especially in the construction sector. But there's also been some good developments. For instance, there's been more domestic consumption in France as well as Germany. Exports have been good, so I think this probably will continue this trend, even though it's going to probably be lower and somewhat volatile.
And we can't forget about the problem children, the PIGS nations of the Eurozone. We have concerns regarding Spain as well as Italy and Portugal as well as Greece. But what do you think are the long-term solutions for those nations?
Well, I think what we see now, potentially a trend reversal, is very important in that money, hopefully, that has gone to the safe havens, especially Germany, will flow back to those weaker countries because there are a lot of great investment opportunities. And if the framework is safer and the risks are reduced, like right now the risk of a euro breakup is lower and the firewalls are pretty strong, that those countries will see the investment that they need because nobody wants to miss out on it. And then hopefully with the help of the European Investment Bank, you can get this ignite growth.
Thank you very much, Sandra, for weighing in on this topic today. And although the Eurozone is on vacation, we'll continue to watch out for indicators from that region. Thank you very much.
Thank you very much for having me.